What's going on, guys? This is TerrenceRe with another stock market update. Right now, look over to the left of the screen, my watch list. You will see that the VIX is down a little over 0.5%. So that means that vol is coming in. We got the Russell futures up 0.25%. The Dow futures just went green on the day. S&P futures are relatively flat. Nasdaq futures as well, but it looks like the market is trying to make a trying to turn bullish on the day. We got bonds are down. As you can see, /ZB and /ZN are both red. Oil futures making a run with the gold futures. I want to put this trade on. Now, I'm going to attempt to get bullish on oil. I will talk about it. We're going to go to the chart as soon as I put this trade on. I just want to get filled on it, and then we're going to talk about it. I'm selling a put spread in oil. Let's see if I can get filled. I don't want it to run away. Kind of chasing a little bit. There we go. So I sold a put spread in oil. I'm going to show you what I seen as I was getting ready to do this video. Basically, I got a bull flag way back here in December, right? Never even noticed it, to be honest with you guys, until just now. We got that run up right here. It hit our first level on my Fibonacci extension right here, right? And I am placing a bet that it is going to catch this next level up here at 85.36. Now, that's what I think. I could be wrong. And if I'm wrong, then I'll lose on this trade, right? But what I'm looking at right here, seeing it run up, watching this the moving average, this 12 moving average exponential getting ready to cross over to 26. I'm going to take that all day. So it looks like it's getting ready to cross over and then run up to here. So that's that. I put that trade on. If we go back and look at that trade, basically selling the 78, buying this 77 and a half. I got filled for this is 0.20, like 20 ticks in oil. Each tick is $10. So basically, max profit is $200. As you can see, max loss about right now is moving around 290, 210. So, and it's a probability of profit of 56%. So that's that. I wanted to get that on and get a chance to put that trade on while I'm live. And whenever you sell a put spread, obviously you think the market is going to continue to go up. You're bullish and you want to see the market continue to, move your way. And I'm doing that basically that's purely technical. Looking out for something that I seen, trade what I see, right? Has nothing to do with fundamentals. I care less fundamentally. If I'm wrong, I'm wrong. Now, with that being said, we had JP Morgan had earnings today. Now, you probably, if you like me, been in here on the market since it opened up. The market opened up down substantially this morning. But then what happened? If you're wondering what happened, uh, JP Morgan did have a earnings beat. Um, the actual was $3.57. Earning and the estimate was $3.08. So they had an earnings beat. And JP Morgan spoke not too long ago. I think he moved the markets himself, right? Let's see if I had it pulled up. Let's see if we can find what good old Jamie Dimon had to say. And pretty much every earnings he does this. Like he'll speak and he can move the market because the market, he's one of those CEOs that the market waits on what he says. The US economy currently remains strong with consumers still spending excess cash and businesses healthy. All right. So that's the first part. They depend on us to keep spending money. Our economy is based on consumerism, right? The American people, like, we got to keep consuming, and they got to keep selling us stuff to consume. That's just it, right? That's the bottom line. So then he says, however, we still do not know the ultimate effect of the headwinds coming from geopolitical tensions, including the war in Ukraine, the vulnerable state of energy and food supplies, persistent inflation that is eroding purchasing power and has pushed interest rates higher, and the unprecedented quantitative tightening. That that little statement right there at the end is key, right? Pushing interest rates higher, quantitative tightening, but he says the vulnerable state of energy and food supplies. So energy is going to be your, obviously we're going to be talking about, like, he's natural gas. I will put oil in there. That may be why we're seeing oil rallying today, and it has been the past few days. So think about it like this: like, when you see oil futures go up, this you'll see at the pump. Like, this will affect you, like, literally affect you. When you see you see the price of oil futures go up, you'll see it at the pump. Like, if I'm right with this trade, gas will go up. And it could, and depend this trade now, that's just one level that I have. It's another level right here, but because of it's the color of the, you can't see it. If I double click on it, you can see it. See 92.67, hopefully. And then you got another level up here at 99.98, and then you got a level all the way up here right around 104.39. Now, I don't know if it's gonna hit all these levels. I'm not taking a bet on that. My trade would be a winning trade if it goes up here and hit this level. I don't need it to hit those. Hopefully I'm wrong about all of these levels, because that means that probably, that's another dollar or so in gas. This right here will probably be another 30-40%. I mean, another 30-40 cent right there. So we'll see. Let's take a look at who else had earnings. Delta had earnings today. Let's take a look at JP Morgan's chart, though. I will look at now. If I go to now, this is a daily chart. I was looking at shorting this earlier. Glad I didn't. But as you can see, it gapped down. Like, it gapped down. Generally, when you get these gaps like this, you get a nice move. It'll continue on. And if it came up, closed this gap, and look like it's gonna make a move higher, like it is making a move higher, like, you might literally get a pullback into here and get some kind of bull flag to where it just take off even further. So you looking at, this is JP Morgan. So let's look at the XLF. This is your financial. This is the ETF of the financials, and you can see it's green as well. So the financials were earlier this morning. If you caught the market when it was open, you may have been thinking that, hey, we're gonna have a down day in the financials, but not so. Let's look at Goldman Sachs just to take a look. Goldman Sachs. If you notice, these charts look similar. So if you were trading this sector, I would find the best looking chart and then try to trade it. It does look like we're gonna get, like, it's gonna continue to go up. And we look at the SPY, the S&P 500. I am down on this position. I put a trade on in here. We look at it. Put this trade on yesterday. A put spread. Getting short. Right. So, and we can. I've been showing this chart for the past couple weeks now. You can see it broke out up here, and it's continuing up. Look like the market's gonna close this gap right here. It gapped down. Look like it's getting ready to continue up. Right. So we'll just have to. We could end up going sideways. I have time on these trades, and they're small, so I put them on. A lot of times, some of these trades I put on for the show, so I could come on here and have something to talk about and then we'll just see. Um, this one I did not sell. I thought about selling the call spread instead of buying the put spread. And you would say, well, what's the difference? You sell a call spread, you can get paid on theta decay. Like it could sit and go sideways and I can get paid. Buying that put spread, I need the market to go down. Gold is still rallying. Like I'm super bullish on gold. Like I really think this is gold's year. Uh, I don't know. Holding gold futures is expensive. Like it's super expensive. Now they do have a small gold, like a micro gold. But if you wrong, it moves so fast. Like you can wake up tomorrow and gold be down here, and you be down a few $1,000s like real quick. So you be careful with trading gold futures. Obviously, you can trade the GLD and get access. But with it being right here, I want to pull back at this point. It's already, look at the RSI, it's red. That's letting you know it's overbought. So, want to get some kind of a pullback, right? You want to see it come down and get a pullback so you can buy it a little cheaper, right? Buy low, sell high. That's the name of the game. One of the things I wanted to talk about that I looked at today, and the market kind of got me like I'm a little perplexed with what's going on. That's why I saying I'm gonna get ready to show you why I think we could just go sideways for a few months, right? Just and that way, iron condors and strangles might be some of the best trades. And the reason why I'm saying that is because look at the VIX going down. Like, so it's at 3-year lows. This is a 3-year daily chart right here. So 3-year daily chart, or you see right all the way over here at about 1650. This is the 3-year low, and look at the VIX. It already took this low out, took out this low, and took out this. Now the VIX, for those of you that do not know, this is the volatility of the S&P 500. The VIX is the volatility basically of the SPX. Right. And you can trade options in here. I advise you I advise the average trader not to. You need to be real savvy to be in there. It is liquid, but you got to be real savvy here. You got you can see that it's a lot of trades in here. You see the open interest over here. You got 92,000, 54,000. People are trading this, but I just think that, if you're not savvy option wise, I wouldn't mess around in here. You know, I've made some trades in here before. I've done some volatility like trades, like maybe uh, come out and buy like a wide call spread. You could do something like, let's say you think you're gonna get a pop involved, right? You could come out here and do something like buy the 22. I wouldn't even do that. I would say buy the 23, sell the 28, right? So that's gonna cost you $55 for a $5 wide spread. This is something more like hedging, and then sell. You ain't getting no juice for selling nothing though. Selling like that. Yeah, you're not. It's hard because they're not paying you. You're not collecting anything to sell. Like, so to sell, this will cost you a 15-cent debit. So if you sold this put right here at 18, which I don't like this trade, and then you bought this call spread, this is almost like a hedge, right, for your portfolio. But I don't like, so it's like a small hedge, but I wouldn't do it 32 days. Let's see if you could come out maybe 95 days. Come out 95 days and then come out here and maybe buy. Now this is like if you got like a spike in the VIX. If you got something like you know, I don't know, World War III started, right? Of course, and then at that point, then you're gonna get a big move. So you come out here and buy the 25, sell the 30, that costs you 75. Yeah, there it's nothing setting up to, because you can't sell. What I'm trying to do is finance this call spread by selling a put spread. So this one right here will cost you $20 to do. So you spend $20 with a max profit of $480. But I don't like, let's see. Let's see if we moved it. So if we did it right here. So now we talking, yeah, you got a credit. So you take in $5 in premium and you got a max profit of $505. So that's something like, that's what I would like to do this though for a, I'll be honest with you, like for a debit, small debit. All right, lock that in. So right here, pay $10. So it costs you $10 to do this trade, max profit $490. Now you got to manage this put spread right here, which I don't like. Now it costs a little more. So you just, all I'm doing is, ideally what I'm trying to do is buy a put spread, buy a call spread, take advantage of like a pop in volatility, and then finance it by selling a put spread. The problem is there is not enough premium over here on the put side to really get it done like I was trying to show. So it's not lining up. Anytime you're trying to make a trade work and it ain't lining up, more than likely that should tell you something, right? So I wouldn't even mess with that right now. There are other ways, and I may do a video of different type of hedges to do with a portfolio. Like you got a portfolio and you trying to manage some risk and you want to, like, if something happened, you want to be able to take advantage of it. There are different plays you can make. Let's look at oil again. Look like it peeled back a little bit. So I'll be looking at oil futures, watching it. We'll see. Let's see if we get this pop. And oil, the way oil work, like we could wake up one day, all it take is like a little headline. Now sometimes news will move commodities. Now just remember, selling a put spread in oil is the equivalent of selling a call spread and like in an equity, because commodities crash up instead of down. So like when something happens in the world and natural gas goes up, the natural gas futures will go up. Like when you have an issue with crops, corn crops or something like that, and the price goes up on corn futures will spike. Same thing with with wheat. What we experienced that with lumber, and during when lumber prices was spiking, when housing was going up crazy. So anything can happen and it could spike up. And technically I like what I see. Like I said, it pulled back to my sweet zone in here. So that's that rubber band effect, that pullback, boom, and it hit that level already. So I'm seeing it, if it was going to continue to go down, it would have went down and took out this low. But the very point that it came in here and stopped and then turned back around, and now we're getting ready to get this crossover on these moving averages. So I expect to see boom, boom, boom. It may go straight there. So I'll do a video and follow up on this trade. Hey guys, you got something out of this? Hit that like button. Comment down in the section, what you guys, some stocks that you looking at for earnings or something like that. I think I'm gonna come back and do a separate video on Tesla. We got Tesla earnings coming up in 2 weeks, and Tesla is down again on the day, but I think it's just pulling back. I don't know if it's gonna really take out this low. So I'm not too, like, if I was bullish, which I do, I think I do have a call spread on, but it's at like 100% loss at this point. I'm just gonna let it expire worthless. But I'm not concerned with it right now. I just think it's going sideways, and it may continue to go sideways until earnings. So earnings will be the big play in Tesla, and which me personally, I wouldn't put another trade on right now. I will wait till after earnings to see how the earnings go, to see which way it goes, to play it that way. So guys, that's it for this video. Be looking for another video. Maybe tomorrow we'll talk about think maybe I'll do like an expected move butterfly and go over it for the next week. And with that, guys, I'm gonna be out. Peace.